Well, we're joined now by Aran Dunlop, who has the job for us of finding deals, putting them under contract, and doing a lot of the heavy work with the negotiation. Aaron, thank you for joining us today.
Pleasure, Steve.
It's always great to see you. Now, we've just had our weekly due diligence meeting as well, so we're fresh off the cuff of talking about all the deals that are under contract or close to contract, which is very, very exciting. I wonder, though, if we could get started by having you answer the question of how the market is going at the moment, in your opinion.
Well, Steve, this is a question that I get asked a lot from people back in Australia. People are always wondering how the market's doing in America. And I've been over here since 2009. And it wasn't until around about this time last year that I finally said, it's Groundhog Day, it's the end of winter. And I think we've now moved from spring to summer. The market is getting hot, and it's getting hot very, very fast, actually faster than I'd expected and faster than I'd hoped, to be honest, because quite frankly, I wanted to buy more deals before it got this active.
What makes you believe that the market's getting hotter? I mean, what's the anecdotal evidence that you're seeing?
There's not as much blood pouring out of the sellers. I'm having to make more concessions. I'm still able to get good deals. It's the difference between buying properties at a quarter of construction value versus buying properties at half of construction value. I'm trying not to make concessions on price wherever possible, but I'm certainly having to concede on terms. It's getting harder to get the longer due diligence periods, and it's getting harder to demand seller financing terms in particular. That's one thing I've noticed as a trend.
Well, I wonder then, looking back and remembering the discussions that we had around the time of raising money a couple of years ago to where we are today, can you believe that things have turned around so fast and so much for the better?
Honestly, I can. I guess it's not so much the degree of the turn, it's the violence of it that's kind of surprised me. I always knew it was going to happen. I always had faith, and I'm kind of on the record as having said that. But I think what surprised me is that it's really happened in like the last three to 4 months, basically since the start of this year. A lot of institutional money has poured into the market, a lot of foreign money too, and it's aggressive. And it didn't creep in slowly over 12 or 24 months. It came in hard and fast. So am I surprised that it's happened? No. Am I surprised at the speed with which it's happened? Yes.
How's the fund looking then, from your point of view, based on the properties that we've bought over the last sort of 12 to 18 months?
If I could step in a time machine and go back and rebuy some of those deals for today, I'd be doing it all day long. The prices at which we were acquiring properties last year, those prices are gone, they're history. So I'm still getting deals, but I'm having to fight a lot harder, and the prices are going up. So the outlook for the fund is great for the people who got in on the front end. It's still good for anybody who's willing to get into the pool now. But I fear for anyone who would want to get in 24 months from now, truly.
Well, let's take a look at the deals that we've got on the go then. How are we going with our deal flow?
The deal flow has taken an interesting turn. We were concerned for a while. We were concerned for a while that, wow, we're not placing this money fast enough. And I do believe during one of our previous unit holder meeting interviews, I said, look, I was picking and choosing the ripest fruit. I was negotiating hard for the best deals. And as a result of that, when the market turned as quickly as it did, we found ourselves briefly in a position where we had money and we had to place it fast, and we knew the market was moving very quickly. So I jumped into gear, and now we're in a position where we have a very strong pipeline of deals lined up, and we've actually got more deals than money at this point, which as a negotiator is a lot of fun because it puts you in the position of power rather than the position of weakness. So the pipeline of deals is looking great right now.
We've coined the phrase today, lowest and best. So we're now sort of marrying off one seller with another and saying, look, if you want us to buy, we've only got a finite amount of money. You better get serious quick.
I can't tell you what a pleasure, Steve, it is to say to a seller, look, I'm trying to pitch your property against the other dozen that we're looking at, so please help me out here. Make your property look better than the others. It's a nice thing to say.
Out of all the properties we've bought so far, I want to bring your attention to Giron Circle, because Stu and I both commented that had you not been so tenacious in your desire to say what a great deal it was, we probably wouldn't have bought it. And given that Stu was saying to me today, there's someone that wants to rent the 7,500 space, someone that works for Disney World or somewhere, and they want to take it as is. They don't even want it, built out in any way, shape, or form. They'll do it all. I wonder, how do you feel now? And I am giving you the right to be self-righteous for at least 30 seconds, based on Giron.
I thought it was a good deal. I stuck to my guns. I got paid for it, and there's nothing more to add to it. I'm not going to toot my own trumpet beyond that.
You're a very humble guy, Aran. What's the best deal we've bought for the fund so far, do you think?
Based on what you said, probably Giron.
Come on, claim it.
I'm going to actually give that one to you. I'm going to say Rams Plaza. Pound for pound. Although you and I have a philosophical difference around buying small deals, you like to buy them, I don't. Pound for pound, return on dollar, I think Rams Plaza is going to be a slam dunk, and neither Stu nor I really was a huge believer in that deal. You were, and that was your Giron. You really rammed that one through, and no pun intended. And and I think that's going to be a slam dunk.
All right, so let's take a look at the deals that we've got on the go at the moment, and looking at those close to contract, and I'll just bring it up on my screen here. We've got 3 properties now, 1 under contract and 2 on the go in Atlanta. I wonder if you wouldn't mind sharing your thoughts about the Atlanta market as compared to maybe the Florida market and the Dallas market, based on what you're seeing.
I like the Atlanta market because it has the advantage of having a very diversified economy, which is something the Dallas-Fort Worth market also shares. But in terms of market timing, Atlanta's lagging a little bit behind Texas. Texas is already well and truly steaming ahead. It's I wouldn't say it's in bubble territory. I wouldn't say it's white hot, but it's moving pretty fast. Atlanta's now just starting to creep up off the ground. But if you look at the market dynamics, it's got a very diversified economy. It's got the most active airport by traffic in the world, not just in the country, in the world. And there's a lot of opportunity in Atlanta, but I guess maybe it's a deep south thing. It strikes me as a market where you have to make connections and relationships to really get to the gold. So I'm very keen for us to try and really get a foothold in Atlanta and start making those connections, because Atlanta provides opportunities for cash flow that simply aren't available in Texas. And although Florida is coming back very strongly as well, Florida does have a historical tendency for fairly severe fluctuations. It goes up and down a lot, which is fine for us because we're long-term holders, but at the same time, I like the potential for cash flow that Atlanta presents, particularly at these depressed levels.
Well, is there anything that you're worried about, Aran, in regards to the fund and where it's at the moment?
Aside from a really sharp movement upwards in the Australian dollar, which would hurt the unit price, and nobody can predict the FX market. The FX market it's probably the most difficult market in the world to predict. Aside from that, honestly, no. My biggest fear really is for people missing out, and when I say people, I include myself in that group, because I want to buy stuff over here for myself as well, and I'm finding it harder to find stuff, and I'm afraid of missing the boat. So my fear would be for any investors who are sitting on their hands. I mean, we're going through our second round of capital raising now, sitting on their hands waiting to see, is this thing real or not? I don't know how much more proof anybody really needs that this is real, and the ship is sailing. You can jump off the pier and you can start swimming, catch up and grab the rope and climb up and still get on if you jump on, but the ship's sailing. I'm afraid for anybody who's going to miss out. I really am, because they're going to be kicking themselves.
6 months, 12 months from now, what are we expecting will be different compared to today?
Based on what I'm seeing, that the market's running hard. I mean, it's really hard, but it's not a bubble-driven market, because there isn't the credit conditions required for a bubble market. What this is a severely depressed market that's rapidly bouncing back to normalcy like an elastic band. So my expectation is, now that the confidence has returned to the market, and buyers are coming back in, credit conditions are improving, but they're not crazy like they were. I'm expecting that the market is going to bounce back to a normal level very rapidly, and I think it's going to take somewhere between 6 to 12 months. My guess would be 12 months. And then it's probably going to stabilize for a while. And then it should continue to barring any negative events, it should continue to grow at a normal rate.
When are we going to see you back in Australia?
As soon as as soon as I'm able to unchain myself from the desk that you keep me locked out.
And we should probably just mention there's a bit of, we'll call it friendly, sometimes fierce rivalry that is sort of playing out between you and me at the moment. What's all that about?
Honestly, I think it's because you've trained me too well. You've taught me too much, Steve. You've got me trained up, and you've got me to the point now where I'm comfortable questioning your decisions, and sometimes that rears its head as you say, friendly rivalry. But it's all in good humour, you know.
Yes, indeed. On that friendly note, Aran, is there anything else you want to say before we sign off?
Well, I believe my last sign off to the unit holders was, if you're not optimistic, then you certainly should be. And all I can say is that's held true to this point, and I would repeat it twofold this time over.
Very good. Well, on behalf of all the investors in the fund, we thank you for your hard work, your tenacity, the fact that you are indeed negotiating incredible savings off these properties. We're not just buying them, and I know we don't keep track of it, but if we were to hazard a guess, and it'd be a complete guess and be conservative, how much money do you think we've saved unit holders in the fund by the aggressive negotiation that we've done on purchase prices?
I know you alone saved them $500,000 on Smyrna Beach, and if I was to hazard a guess across we've bought about what, $26 million worth of property now.
We have.
I would say
that's right, 26 mil.
Based on discounts and purchase price, it's got to be in the $3 to $4, $5 million range.
So I think the fund holders need to know that based on your hard work and your training and your sometimes aggressive negotiation tactics, that we've saved them millions of dollars. And in real estate, $1 saved is $1 made. And that will all go well for us when it comes time to exit. So on behalf of everyone in the fund, even though they don't know it and they don't see it, thank you for the long-winded conversations that you have with realtors, the thankless task that is a contract that doesn't get over the line, dies on the doorstep, and all the aggravation that you suffer on behalf of the fund. But we greatly appreciate your input. So once again, on behalf of everyone, thank you.
Thank you, Stephen. On behalf of myself and all the unit holders, thank you for all the thankless, unknown, unsung tasks that you perform as well.
All right, Aaron, I'll talk to you again soon. All the best.
Take care, mate.